Some of the most frantic calls we get from our prospective clients are from people freaking out because they just got hit with a wage garnishment or IRS bank levy. And with good reason. Most of these folks had no idea why. And they're all irate because the IRS legally took money out of their bank account or slashed their check at work. We're gonna go over everything that you need to know about the IRS using aggressive collection action using bank levies and wage garnishments. Hey everyone, welcome back to the Tax Workshop. I'm Josh Kahn with Anthem Tax. The IRS is the only collection agency in the United States that can go into someone's bank account or garnish a check at work without a court order. This free reign of collection allows the IRS to target delinquent taxpayers pretty much however they want, whenever they want. But you can protect yourself against these tactics. Check this out. When the IRS wants to collect on a debt of the common taxpayer, they have two options. They can either do the often used wage garnishment or the less frequently used bank levy, no matter which route the IRS chooses. They can't just do it willy-nilly. They have to alert the taxpayer of their intention via 3 IRS letters. The IRS will first send the taxpayer an amount owed letter. This letter will state the amount owed and give the taxpayer 30 days to correct the issue. This letter is followed up by a second certified intent to levy letter. This more aggressive letter also gives 30 days and warns of severe penalties. Finally, the last letter is a certified final notice of intent to levy letter. If the taxpayer doesn't respond within 10 days, the IRS will most likely garnish wages and possibly levy your bank account. Now, there's often a big misconception that the IRS most likely knows everything about you. Nothing could be further from the truth. Rest assured, Big Brother is not watching you. They don't just know what bank accounts you have and where you keep your money, but they do know who's paying you if you are making income. And the reason for this is because whoever is paying you must report that income to your Social Security number. So if the IRS has been trying to collect against a taxpayer, and all of a sudden they see that taxpayer's social getting paid, then they will quickly send a garnishment letter to the taxpayer's employer. The employer is then forced to withhold wages and pay the IRS instead of the taxpayer. This method is the path of least resistance for the IRS, because if they had your bank account info, believe me, they would go there first. Also, if you get garnished and you haven't received these letters, it probably means that you haven't filed in a while and that the IRS doesn't have your updated address. So now that you know a little bit of how the wage garnishment works, let's get into the IRS bank levy. See, the IRS can only levy a bank account if they have the info. And the way they get that info is through a form called a 433. It is a financial disclosure form that is submitted when the taxpayer either applied for a payment plan or a financial hardship program. When the IRS levies an account, the money isn't gone right away. It's frozen. The bank is supposed to wait 3 weeks before sending those funds to the IRS, giving the taxpayer enough time to potentially get it released. But after that money is sent, it's gone. And depending on the size of the bank and the experience they have with levies, they may send the money much sooner than they should have. So the trick is to act quickly. So now that you understand wage garnishments and bank levies, you're probably wondering, how do I stop them or get my money back? Well, in both cases, whatever the IRS officially takes is gone. That amount is going to go against what you owe. But to stop them again from doing it in the future, you have a few options. You can either agree to a payment plan that they set, or if you call a tax professional, you may be able to get into a financial hardship program that'll protect you from future collections. Either way, in order for collections to stop, the IRS will need to send your payroll department a garnishment release notice, or your bank will have to receive a bank levy release. But be prepared to show good reason on why you can't afford to pay them. For further information, feel free to call us here. For Anthem Tax, I'm Josh Kahn. Thanks for watching. If you like this video and you'd like to see more like it, don't forget to like and subscribe, and don't forget to hit that bell icon so you can get notified on more videos like it.